Let's talk about Joe Biden's tax proposal for capital gains.
Okay.
What is he doing? What the hell is going on? Because we spoke about
messing
capital
us
gains
up.
earlier, right? Mm-hmm. What is he trying to do to the capital gains tax?
All right, there's a few things. And
Talk
this
to
makes
us,
me
Ms. Business.
sad.
We need to hear this.
Because I feel like when you raise taxes, you strip us from our wealth. That's what you're doing, right? You're taking our money. Okay, capital gains. So basically, the highest capital gains right now is about 23%. He's trying to raise that to like 46%.
Jeez.
I told y'all I read it.
So he's trying to raise us to basically doubling up.
He's basically doubling up, yeah.
For who? Who's gonna have to pay this capital gains tax? What's the breakdown of this?
Well, let's again, right? Capital gains, and when we're talking about this, we're talking about real estate. We're talking about stocks. We're talking about, all these things that we all learn on EYL, right? These vast majority of industries.
Shout out to EY.
It is so important to understand that once you start making more money, which we all want to do, that's why we're all here. That's why we're tuning into all this stuff. When you start making money, right now they're saying, okay, this is only if it's above $400,000. Those are the people that it's going to affect. However, we're going to talk about capital gains from two perspectives. We'll talk about it. And this is how it's all a trick in my mind. Because if you start saying that you're only going to affect the top percent, what do you think the top percent of people are going to do? You think they're going to take that loss? You think they're going to start raising rents? Or they're going to start, they're going to start recouping in different ways.
They're going to push it somewhere else.
He wants to raise capital gains on people that are making the income of $400,000 or more. And the last time I read, to be part of 1% of the world, the 1% earners, those people are making $500,000 or more per year.
Yes.
All right. I want to clarify that.
Yes. So pretty much $400,000 or more in capital gains. And keep in mind, income tax and capital gains are two different things. Right? So you did a flip, you held the house, you have this income now, you sold it, you flipped it for $400,000. Well, let's say $500,000. It's an investment property. You're looking at 46% now, right?
Wow.
Half of it will go for tax.
Do your math, Corey. Do your math.
About half of that is going to go to taxes, right? And so that's crazy.
That sucks.
So wait a minute. So I made $500,000.
About 200.
I made $500,000, and the Biden administration and them.
And the
President Biden,
the president
they were like
and them.
$240,000 of the money that I worked for.
Yes.
Because I made a lick.
Yeah.
Because
Because you came off.
Because I did my research and did my due diligence and I brought right.
So what can we do?
What can we do? Well, first of all, this is not official yet.
This is not official, so I can't necessarily tell you what you can do because I don't know what else is coming out with this, right?
Okay.
But there's some other things that they're also talking about kind of changing as it comes to capital gains.
Mm-hmm.
So another great thing about capital gains is that when you die, if you have any stocks, any assets, anything like that, you're able to give it to your children tax-free. It can your children can inherit it. Biden's like, no, we taxing that at death.
What?
The same amount?
Same amount, yeah.
46%.
Wait, hold on,
It's no like death capital gains rate.
Wait, hold on.
It's just capital gains rate.
Hold on. Hold the fucking phone.
Now it's being taxed.
Hold on.
No, you said it too quick.
You're trying to say we busting our butts right now.
Mm-hmm.
We grinding. We building generational wealth. We listening to EYL. We getting all these gems.
First of all, you listen to the Rants and Gems show.
Yes,
That's
you're
a
listening
fact.
to the Rants
And you
and
listen
Gems
to
show.
EYL.
You are part of the EYL network, right?
Yes.
Right.
And you're buying this real estate. You're flipping your properties, and you you passing it down to your people, your children.
Usually, if you pass away,
And now
it can
they don't
just
get
passed.
But right now, as it stands, they don't get taxed. They don't have to pay
They
no
don't,
tax on
no.
it. But if this passes, now they're going to get taxed.
Yes,
That's
no.
bullshit.
yes. And there's one thing. You ready to move into 1031?
Oh,
Wait a minute. Okay, before
Hold
we
on,
go
hold
to
on.
That's
capital
not
gains,
capital
You're giving me anxiety right now. I need a fan or something. Like, come on. Like, chill.
So outside of the capital gains, like it's a proposal in
It
place.
is a proposal in place. Of course, Congress has to approve it. I hope that all of this isn't passed because there's way too many tax increases, especially as it relates to real estate. Like I feel like real estate from the beginning of time have just been one of those investment vehicles where, it's very easy for you to create that wealth. And, you're able to defer your taxes. There's so many incentives. And it just seems like they're trying to get rid of all of it, which I think in turn is going to really, really hurt the real estate market, because now there's no incentive for me to hold on to this property until it gets to a certain amount. Like now, it's just like, it's just a lie. Just to me, it's like there's rents that's going to be raised.
Of course.
Before there was like an incentive. I don't know. Can I go into 1031 exchange, please?
Go ahead. Go ahead. Go ahead.
I want to make sure that you just don't step into 1031 exchange. Okay. Everybody doesn't understand what 1031 exchange is.
Let's break this
down.
So
we got to break it down to the beginning, what it is, how it affects you, and what the current law is and what the proposed law is.
Yeah.
Okay.
Break that down. The floor is yours.
The floor is mine. Okay.
This is your floor.
I've been waiting for this
We're
one
just going to drink our water and wine.
I'm going to take my wine while you do all of this.
Okay,
now
you might need a sip before.
Let me switch. Okay.
Audience, y'all need to take a sip too.
Before she gets going.
Yeah,
Audience, you guys
this is what we do on the Rants and Gems. We do what the fuck we want.
Let's do what you want.
Let's
go. Take your sip. Get ready for the 1031 exchange rules.
1031 exchange is an amazing tax law, which is tax code law 1031. In the 1031 exchange, what it allows you to do is it allows you to defer taxes relating to assets, right? So real estate, paintings, not stocks, right? So if you have real estate and you want to defer your taxes, you just have to find a like-kind property within a specific amount of time, which I'll get into, but I just want to kind of get out what 1031 exchange is, and then we'll talk about the process. So you do have to invest in a like-kind property within a certain amount of time, and you can defer your taxes. So what that means is if you purchase a property for $500,000, you sell the property for $1 million, and this is your investment property. You can take, the $1 million less like your closing costs and all of those things, and you can invest it in a property of equal or greater value, basically greater value. It can't be like $1 million or $1 million, but it has to be a greater value. $1,001 is okay, right? So that's what's important. It's amazing. It's genius, and it helps so many real estate investors invest. And I'm sure you get a lot of clients because they're like, I have this property. I need to sell it in a certain amount of time.
Yeah.
And
it's a time period.
It's a time period.
It's time sensitive, and you got to hurry up and spend the money. Like they got to hurry up and buy something else.
What's the time frame?
Time frame. So you have 45 days to identify a property and 180 days to close on a property. Okay, so it's not as simple as, okay, I have this money, it goes to my account. Another thing to note, you do have to get an intermediary. And that intermediary has to hold your money. So the money cannot go into your bank account. I get so many clients that'll call me and say, I just want to kind of pay a little bit of debt off, and then I want to do 1031 exchange. You cannot do that. You have to, all the money that comes from that sale, you have to give it to an intermediary. They hold the funds. And then when it's time for you to purchase the property, your next property that you are going to 1031, then they go ahead and they pay for the property using those funds from your previous property.
Now, let me ask a question.
Yes.
Because every person isn't aware of 1031 exchange. So who would the average person, I'm like, I need to learn more about this. Do they consult with their agent? Do they consult with their CPA? Do they consult with their attorney? Who would be the person that's going to really best put them in the right direction?
All of my clients, it's a collective effort.
Okay.
They need their broker.
Yes.
Because their broker and you have to get a broker that understands that this is very time sensitive. Because I had a client really have to pay the capital gains because they were working with a broker that just was dragging their feet on it because they didn't understand 1031. So regardless of what you're doing, make sure that you're consulting with people and working with people that understand exactly what you're doing at that point. So your broker is very important and your CPA is very important. I need to understand what you're doing. I honestly, in terms of the transaction, I don't necessarily come in but a lot of my clients, we do need to speak about it because I need to make sure that they understand exactly what it means from a tax perspective. And having that person that, you can reach out to is very important because, not everything is one for one. You may have a little bit of, additional income where additional gains that may then become taxable. So you may need to find a property of greater value.
Yeah.
So you have to allow me to run those numbers to let you know, what that even means.
How do we find the company that we have to put the funds
Exactly.
in?
Who's the intermediary?
Who's the intermediary? How do we find them?
I don't know. You should tell them.
I mean, you want me to tell them? I mean, Google's your best friend.
Well, I don't know. So I know most of the time it's escrow companies. Mm-hmm. So there are escrow companies that most clients will work with so that they can hold their funds.
So we're talking more or less closing attorneys. In our state, we have closing attorneys. In other states, you guys have you just only work with title companies. So I think what you want to do is consult with your agent and also consult with your title company and or closing attorney, depending on your state, to find out how they can assist you in holding these funds in escrow until you can find out where you can take this money from here to here, not a little bit here and there. It goes straight to them into a property, not from them and you take $5,000 because you want to go pay off some credit card debt. No. The entire amount, if you made $100,000 from that purchase, from that sale, goes directly into another
don't
touch
the money.
You can't touch the money.
Well, that's why it's important for team building.
That's what I was going to say. Do you guys see how that just came together?
Yeah, having the right team.
Kiana, so the answer to your question is you. You are the person. You are the person that they need to contact.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.